Okay, guys, so let's quickly see, based on question 1.5, what have you identified as some of the errors that were made on the bank reconciliations? Okay, so Mapaledi says the bookkeeper has included a dishonored or RD check in June's reconciliation. Okay, so yes, where do we normally include RD checks? Because I'm just going to repeat the question. Where do we normally record a RD check if it's not supposed to go into the bank reconciliation? Okay. Okay, so Mapaledi say we take them out of the cash book receipts and record an equal amount in the cash book payments. That's correct. So to reverse what we've already included in the cash book receipts, we put the same transaction in the cash book payments, which basically neutralizes it back to a zero. Okay, what other mistakes have you guys identified? Okay, anything else that you guys have identified? Okay, let's start with the June bank reconciliation. If you look at the balance per the bank statement, the balance per the bank account, have the bookkeeper reflected that correctly based on what's standing in brackets? Okay, so I'm going to repeat the question. If you look at the bank reconciliation statement and you look specifically at the balance per the bank statement, the balance per the bank account, has the bookkeeper reflected it correctly? Okay, so Mapaledi says no. So yes, they haven't actually shown it correctly. That is 100%. Okay, so you guys said no. How should the bookkeeper have reflected those balances? And you can just give me a brief explanation, like a 1-word or 2-word, why you say that. What information there indicates that they've shown it incorrectly? If it is quicker for you guys, you are also welcome to pick up your mics and just answer. Okay, so my lady says there's no brackets or a negative sign. That's correct. So the fact that they tell you the bank balances is unfavorable. I said when it's unfavorable, I actually owe the bank money. So when I owe the bank money, it is a liability in my books or in the business books. So then we have to show it as a credit as opposed to a debit. And when all the amounts are in the same column, to distinguish credits from debits, credits are always in brackets or a negative in front of it, and the debits are shown as positive. Now that mistake was made in both the June as well as the July bank reconciliations. Okay, so we've picked up that. We've picked up the RD checks. Let's quickly see what else could potentially be an issue. Okay, so when we look at the outstanding checks, you need to go note the date of those checks. So based on the information they've provided, do we think we have any stale checks that could potentially be there? Okay, so Mapalidi says check CC131 could potentially be stale. Okay, but in which month, Mabali and Mapalidi, in which month do you think this check would become stale? Is it stale in June or is it only stale in July? Okay, so in July, if you counted from Feb, it would only be stale in July, yes. So in June, it will still be under 6 months, barely, but by the time you get to July, it would have actually become a stale check. Okay, then if you also look at the checks, you'll see the last check, CC168, states it's dated the 2nd of August. Now that could potentially, that is something you'll have to go look into, because if you look at all the other checks, it's either in June or previous to that month. So normally your checks would be for the same month. If they are post dated, it would generally be just after month end. It wouldn't be that far ahead. So that, for example, would be something that you have to go investigate. It might be potential that you've indicated it incorrectly, especially if you look at the following bank reconciliation, that check is not reflected on there, which means it must have gone through the bank account, which means that date which they showed there is incorrect. Okay, if we move on to July, the bank statement balance as well as the bank account balance is unfavorable. What is also an issue on that one is the fact that we've got an unexplained difference at the bottom. When you do a bank reconciliation, you should never ever have an unexplained difference on there. You should be able to know exactly what it relates to. As soon as we see unexplained differences, it might be an indication of cash manipulation or fraud. Okay, then we've got an amount transferred to savings account on bank statement, but not in the cash book payments journal. Okay, that should not be on there. So if it is on the bank statement, but it has not been reflected on your cash book payments journal or cash book receipts journal, those amounts should be reflected in your journals itself. We call it an adjusting entry. Then if we look at the outstanding deposit, something else you would have seen is the dates of the outstanding deposit. Is there any outstanding deposit in the July reconciliation that looks a bit funny to you? Okay, so I'll just repeat the question. If you look in the July bank reconciliation and you look at the list of outstanding deposits, is there any deposit that looks a bit funny to you? Okay, so Mabali and Mapaleti thinks deposit number 24 could potentially have something that we need to look out for. And that is absolutely correct. If you look at the information, it tells you we've received a check from CRU dated 8 August. Now that means that money will only be received in August. Now in our cash book receipts, we only record the money in the month that we physically receive it. So if we receive a check from our debtors that is dated off the month end, then we generally keep it, in practice, we keep it in a little file and then we only capture it in the following month. So that amount should not have been shown in our cash book receipts at all in July and should also therefore not be shown on the bank reconciliation. Okay. So that is just something to note. So what they said is they've entered it in the cash book on the 8th of July as opposed to the 8th of August. So they've captured it on the cash book receipts on the incorrect date. Okay, then we've already covered the stale check and we talked about the unexplained difference. Okay, so those are the main things you were sort of supposed to pick up from the first question. Now, if we look at the second part, they ask you, do you think the bookkeeper is effectively controlling the cash and finance operations of the business? And then why do you think they're doing it well or not? Why do you say that? And then highlight at least 3 other points other than those mentioned to support your answer. Okay, now based on what you've seen, do you think this bookkeeper is managing the cash well? Yes or no? Okay, so based on the information you've seen, do you think our bookkeeper is actually managing the cash of the business well or not? Okay, so my lady says she doesn't think they're managing it very well, and that is correct. Now, the reason for that being is if you read the additional information, they tell you that, okay, we operate a general bookstore and sell books for cash only. It has been noted that the bookkeeper deposits cash into the bank once a week only. So they only deposit the cash weekly. And then business has an overdraft facility of 30,000. Okay, so the first thing, the fact that they deposit the cash only on a weekly basis. This is a high risk, especially for a cash business, because it could result in theft. So someone can come rob the business, the cash or the bookstore and take all the cash. So you're sitting with a high risk that that money might be stolen before it even goes to the bank. Then the second thing is we've got a bank overdraft facility of 30,000. But if you look at the bank statement, we already in the unfavorable balance of 38,000. So we've actually exceeded our credit or our overdraft facility, which means we are not actually managing our business as well as we should. Then also, if you look at the July bank reconciliation, we transferred money to the savings account. Now, in practice, before we ever take money out of our bank account to our savings account, we first go and pay off any loans, any overdraft facilities that we have, because of the fact that those overdraft facilities interest are a lot higher than the interest we would earn on a savings account. So that's also another thing that he's doing badly. He is not managing the money appropriately. So those are sort of the things you were meant to pick up. So let's just quickly recap. So these are some of the main errors that you were supposed to pick up. The RD check that's on the bank recon should have actually been cancelled in your cash book payments. Your post-dated check from your debtor should be dated at 8th of August, so it should not have been captured in your July bank recon. Your post-dated check CC168 issued for 2nd of August should appear in your July bank recon. Okay, so in this case, they say the date was correct, so we should have also seen it in our July recon then. Then check C131 is a stale and should not appear in your bank recon and should have been cancelled. And then check 166 has been entered in June and July at different amounts. Okay, so that's one we missed. So we missed that the amounts for check CC166. So in the one it's been captured for 3,100, and the other one it's been captured for 13,100. Okay, so that's one we've missed. And then the transfer of your savings account shouldn't appear in your cash book payments. Okay, so those were the main errors. Now, if we look at the second one, the balance at the end of July after the correcting the errors exceeds your overdraft facility of 30,000. This means your checks will RD, which generally have heavy bank charges. There's too many outstanding deposits. So there's already 3 outstanding deposits. That's what we mean with the fact that we only cash it or bank it once a week, which means there's a lot of cash lying around. It's a high risk to the business that it might get stolen. And the thing that we said, it's not sound financial advice to transfer money to a savings account when you actually have an overdraft facility because of the interest rates that gets levied on there. Okay, do you guys have any questions on this? Okay, so ma'am, I've got a question. Because the balance as per the bank account is unfavorable, when doing a T account for bank, do we use them as unfavorable or negative amounts to get the balance as per the bank statement? Okay, so Mabali, when you do the bank reconciliation and we've got a negative or unfavorable balance, in your bank reconciliation, you will show that amount as a negative, but when you do the general ledger account, you will not show it as a negative. You will actually show that balance on the credit side of the bank account rather than the debit side, which it normally should be on. Okay, so only for the bank recon do you show it as a negative or in brackets, whereas when you do the general ledger account, you just show it on the credit side, which then tells you it is a negative or unfavorable balance. Does that answer your question? Okay, so then the cash book receipts and balance will be on the credit side. Okay, no, so remember the cash book receipts will be on the debit side, but what it means is the cash book receipts amount will be generally less than your cash book payments. If you look at question 1.5, you'll see in June the cash book receipts amount was 152,000, the cash book payments was 175,000. So when you balance that, the balance will be on that you carry over will be on the credit side. So initially the balance brought down will be on the debit side, and then when you carry it over, it will be on the credit side.
Sorry. Hello, ma'am.
Yes.
Sorry, I'm not getting it. Let me just ask you one more time. So in terms of the T account, remember it's
Yes.
balance and then it's total receipts and then the payments on the credit side. So when the
Yes.
amounts are unfavorable, does the total receipts go on the credit side with the total payments?
No, no. Okay, let me quickly do the whiteboard and then I'll show you what it looks like.
All right, thank you.
Okay. Okay, I'm just going to stop sharing the slide and then just open the whiteboard quickly. Okay, can all of you see the whiteboard? Just give me a thumbs up if you can see it. Okay, now with the bank, so I'm just going to say a bank. Okay, this is our general ledger account. So let's say in this question, our bank balance was unfavorable in the beginning. So you normally start with, let's say, 1st of July, and then we've got the balance brought down, and let's say it was 30,000. Now, because of the fact that I've put it here on the credit side, this tells me it is unfavorable. Okay. If it was favorable, it would have been on the opposite side. Now, when we do our transaction, so let's say 31st of July, total receipts. Now, in this question, the total receipts was 89,500. So your total receipts, irrespective of whether your balance is positive or negative, will remain on the debit side as always. And your total payments, in this case, it was 86,400, will remain on your credit side. Okay, but now what it means is if I take the 89,500 and I compare it to our credit side based on this information is 126,400. So that means to get the debit side equal to the credit side, I will have a balance carried down on this side, and the amount will be, let me just quickly work it out. So it's 8,400, that's 30,000, less our 89,500. So to balance our account, the balance that would be bought carried down would be 29,000. And this would be on the 31st of July. Okay, then we would add it up. We would get 116,400 this side, 116,400 that side. And then on the first, we would bring down the balance again. Of 26,900. Okay, so what you will see, the receipts and the payments will stay on exactly the same side. If it's an unfavorable balance, it's on the credit side. If it was actually favorable, we would have done so let's say it was a favorable balance, so we actually had money in the bank. It would have been on the opposite side. And then that balance here on the 1st of August would have actually sat on the other side. Okay, so when they talk about unfavorable, it just means it's on the opposite side than what the bank account's balance normally would be. So normally our bank would have a debit balance. But if it is not normal, so it's unfavorable in this, then you would put it on the opposite side. My body, does that actually answer your question for you now? Okay, great. Okay, so I see we are done with session 1. So let's take a 10-minute break. If you guys can be back just after 9. So it's 8:53 now. So we'll start 3 past 9. So I'll give you a 10-minute break and then we'll continue with the session.